You are on the Transparent FX Academy. I'm Nick, and I'm a top author on TradingView with over 250,000 reputation points. And what I love the most is sharing educational breakdowns that show you how you can be looking for the best trading opportunities in the market. So without further ado, let's go and see which is today's Forex pair that we need to break down. GBPUSD is the pair that we will be speaking about in today's video, one of the most traded pairs in the market. And as usual, I want to keep this analysis as educational as possible. So first, we will be covering the technical aspect of this market. Then we will go and see what we have from an order flow perspective by checking the commitment of traders, which is what hedge funds, so the biggest speculators in the market, are doing. And by the end of the video, by using the combination of our technical analysis and our order flow analysis, we will be able to understand where we have the highest probability setup here for this pair. So starting here on the monthly time frame, what do we have? Now here on the monthly, we have a market which has just provided a nice impulse to the upside, followed by this correction. Now, generally speaking, after the creation of an impulse, if you want to measure the correction, what you have to do is take your Fibonacci from the low to the high of the impulse. And if we do that, what we can see is that the market has retraced exactly to the 0.382, which is the first Fibonacci level to which you expect the market to provide a correction before starting this rejection to the upside. So at the moment, here in the monthly, everything is quite clear. The market provided a correction exactly to this 0.382 and has currently started this rejection to the upside. Going down on the weekly time frame, what do we have? Now here on the weekly, the price action is quite clear. We can see that in all this impulse to the downside, there is one candle which is not related to the move, which is exactly this green candle here, which is actually a quite strong demand area. And we can see that the market has just tested exactly this demand and is currently starting this rejection to the upside. Now, generally speaking, after an impulse, if you want to measure the correction, what you have to do is take your Fibonacci from the low to the high of the impulse. And if we do that, what we can see is that the market has just retraced exactly in the zone which is in between the 50% and 0.618 of the Fibonacci taken on this weekly impulse, which is a quite strong confluence of support area that we do expect the market to reject to the upside, possibly also creating a higher high. So here in the weekly, everything is quite clear. We do expect the market to provide a continuation to the upside and print a higher high. Just a quick thing, for more educational breakdowns, make sure you subscribe to the channel and hit the bell. Going down on the daily time frame, what do we have? Now here on the daily time frame, we can see that the structure that the market has just provided is still not clear. In fact, the market, first of all, had created this M pattern here, and after the creation of this M pattern, I made a full breakdown explaining all the reasons for which we expected the market to provide this move to the upside, and in fact, that is what the market did. And by the way, I will link in the description this previous analysis so you can go and check it out for further reference and more free education. However, now that we have broken above this structure, where we can be looking for the next potential opportunity. Now, before I show you that, let's first go and see what we have from a COT perspective, so commitment of traders perspective, which is what hedge funds are currently doing in the market. Now, if we check the COT data on the pound, what we can see now, keep in mind that all currencies on the spot are traded against the USD. So if you check the data for the GBP, you are actually already checking GBPUSD. And what we can see here is that with the last reports, net positions have been increasing. In fact, we went from having 21.8k net positions all the way up to having 29.2k net positions, with 59k longs and 30k shorts from an institutional perspective. So GBPUSD is getting quite strong, meaning that a continuation to the upside is very possible. So how we will be approaching the potential next opportunity on it. Now, what we can see here is that at the moment, we have no interesting structure. We see a move to the upside, move back down, move back up. Now, from here, there are two possible options. Either the market will provide a deeper correction, or the market will provide a move to the upside. Both these moves provide an opportunity. Why am I saying this? Because if after this move to the upside, move back down, move up, we will see a move down, in that case, what we will have is the creation of an M pattern. And after the creation of an M pattern, what you expect is for the market to provide a move to the upside to complete the pattern at the neckline, which is the previous support turned resistance. So here on the daily time frame, if we will see a move to the downside, at that point, what we can be doing is looking for a potential longing opportunity. And how we will be doing that? Well, as usual, we will be reactive and not predictive. The monthly, weekly, and daily timeframes, those are the best timeframes from a directional perspective. But when it comes to confirmations and entries, the best timeframes are the 4-hour and the other intraday timeframes. So if from here we will see a move to the downside, at that point, with students, we will be monitoring price action from a 4-hour perspective and lower during this move to the downside, and we will be waiting for the market to shift from a 4-hour and lower bearish market, as we will have, to a 4-hour and lower bullish market. And as soon as the market will shift from an intraday bearish to an intraday bullish market, at that point, we will be adding GBPUSD to our watch list. And as soon as the market will provide to us one of our valid entries, we will be taking a nice long with a good risk to reward and good probabilities at that point for the move to the upside, and for the market to complete the pattern at the neckline, which is this previous support, turn resistance here from a daily perspective. On the other side, if from here the market will provide a move to the upside, then in that case it's even better, because what we will have is the creation of a nice W formation. And after the creation of a W, you expect the market to first complete the pattern at the neckline and then provide the continuation to the upside. So if the market from here will manage to break above this structure, after a break on the retest of this previous resistance turn support, at that point, what we will be doing with students is once again monitoring price action from an intraday perspective. And as soon as the market will shift from a bearish to a bullish market from a 4-hour perspective, at that point, once again, we will be adding GBPUSD to our watch list. And as soon as the market will provide to us one of our valid entries, we will be taking a nice long for the completion of this impulse correction and impulse pattern to the upside. So as you can see, in both cases, we will be looking for potential longing opportunities because the CO theta is showing a stronger exposure to the positive side of the GBP, meaning GBPUSD. And overall, the structure is quite clear. If we will see the move to the downside, we have an M pattern, which we expect the market to complete the neckline. And if we will see a move to the upside, we will have a W that we expect the market to complete to the neckline before the continuation to the upside. And that is exactly where we will be looking for the potential longing opportunity. If you enjoyed the video, make sure that you smash that like button and comment below. You can also go and check out the mentorship program. The link is in the description. It's a very complete program. First, you learn all the rules of my rule-based strategies. Then you trade the strategies with me. In fact, every day I give you a new daily market breakdown showing you how to apply the strategies with the entries, stops, and take profits. And we also have a daily Q&A session in which I answer all your questions. So it's a very complete program. I really suggest that you go and check it out. The link is in the description, and I will see you in it.